We're going to touch on a really confusing topic today. Let's break down how a lender assesses your tax returns being self-employed. So most of my clients assume that it's the revenue that's the important factor when assessing your income. It's actually not. It's your net profit. So it's your revenue minus your business expenses. That's what the lenders use to assess your income. So a good rule of thumb is when you're looking at your tax returns, they'll look at your net profit, and there are also certain things that they can add back to use as income as well. So a good example of that would be if you purchased a vehicle recently, the lender could add back the depreciation cost onto your total income. Another example is interest. So if there's any interest that's already expensed in the tax return, they can add that back towards your total income. And another common add back is one-off non-recurring expenses. So you may have expensed something like a fit out. That's something that's not going to recur again next year. They can add that back towards your total income. Then depending on the lender, they'll either look at your last two tax returns, average the two, or they'll just adopt 120% of your most recent return if it fluctuates a lot in comparison to last financial year. There are lenders that also have more simplified ways to assess your self-employed income, or some lenders will just adopt the most recent one, but this is the general traditional way. So let's break down an example. Your business's revenue for last financial year was $200,000. Your expenses were $110,000. So your net profit is $90,000. This is the figure the lender will use to assess your borrowing capacity. But you also claimed $15,000 in depreciation deductions. We've added that back, so now we're sitting at 105. There's a lot more to it, but this is just a simplified example. Here's a pro tip for you. If you have property goals in sight for the next financial year, make sure you involve your mortgage broker with your accountant before finalizing your tax returns. Your mortgage broker and accountant will work in tandem to maximize your chances to achieve your property goals. And if you want to learn more about navigating the self-employed maze, click the link in my bio or check the comments below. And don't forget to follow for more mortgage tips.